Okay, what's up, y'all? What's up? How y'all doing? I hope y'all are doing great today. So this week, this video will be on FVG, which is fair value gaps. Fair value gaps are what ICT calls imbalances in price. I'm gonna show you how to spot them and why they matter in market movement. But like the deeper entry logic and the confirmations, that's another video. What is FVG? What is FVG? A fair value gap, price imbalances that happens when the market moves too fast in one direction. So basically, not all the buyers and sellers got filled. It shows up as a small gap between three candles. Price often wants to come back and rebalance that area before continuing its move. Fair value gaps are very important when you're trading ICT concepts. That's the way I trade with a little bit of but they're very important. Fair value gaps can happen in the 4 hour time frame, the 50-minute time frame, the hour time frame, the 5 minute time frame, the 1 minute time frame, the 15-second time frame. It's gaps everywhere. Throw them up, it's gaps everywhere. So what we have here is our hourly time frame of the chart that I normally send in the morning, right? So I mark up my chart. This is what we're looking at. We got the highs and session lows all marked up and everything. So I'm gonna break it down. On this particular day, I saw a fair value gap in the 15-minute time frame while I was on TikTok Live. So this is the 15-minute time frame right here. The fair value gap that I saw, mind you, this is what time? This is the 7:30 candle, so I am on the computer. The fair value gap that I saw, and I'm gonna zoom in. We'll call this A, if that helps. We'll just call it like that. Candle C, candle B, candle A. Okay. Do we got it? This is candle A, this is candle B, this is candle C. There's three candles. One up, one big push, and another continuation. Notice how the wick of the first candle A doesn't overlap the wick of the third candle C. That's the gap. You want to have your box on top of candle A wick, and you want it to be touching candle C wick. Your 15-minute fair value gap. When price moves that aggressively, it leaves behind this gap. And later, you'll often see price return to that area before continuing its original direction. That return is what we call rebalancing. So now understand this, not every fair value gap is worth trading. Some of them fill quickly, others get ignored. Y'all see it be happening live. It get disrespected. We just delete it. We just keep moving on. Sometimes it come back to that fair value gap you had, and then it shows respect. So for now, I just want y'all to get familiar with spotting them clearly on your chart and as quickly as you can. So I'm gonna hit play and we'll watch this video. How price respected this fair value gap and how it came back extremely fast. So it came down here once. That's a point of entry. You could have entered right here at this wick with your stop loss at this low right here. It didn't dig deep into the fair value gap, but it tapped it. You see how fast price came down like that? Boom. It tapped it, came fast, instantly fast. That's when you want to get in for the buy. And that's the move right there. It continued. That is fair value gaps. So you had an entry right here. Boom. It came tapped it right there. That's the entry right here. If you would have got in right here, your stop loss would have been underneath this candle. Okay. And then if you would have another entry because it came down fast, it respected it. This is the 15-minute time frame. You could have got in right there at that point with the same stop loss. I want to give y'all like a challenge this week for when we trade in, or sometimes whenever you got some time. Go into your replay, or you could do this live charting and mark 3 clean fair value gaps you find during a New York session, and just watch how price reacts when it returns to those zones. Don't worry about taking a trade now. If you want to, you can take it, but just focus on building your eye to clean imbalances and how the market feels them, and you can point them out instantly without even thinking too much on it. So basically, so the recap of this video is fair value gaps. They're simply imbalances in price, and the market tends to rebalance those areas before continuing. If you're still unsure how to tell which gaps matter or how I use them for sniper entries, we could go over it in a one-on-one or doing a live call on Discord. I try to point it out if I have time. For now, just keep studying your charts, mark your fair value gaps, and watch how price reacts to them. The more you train your eyes, the more structure will start to make sense. I promise y'all. Like, I didn't learn this overnight. I promise y'all. It took me a lot of time to spot these fair value gaps. And I was on the charts every single day, not even trading, just watching the market, live market, because sometimes bar replay sucks. And that's how I got it down pack in all time zones. I could just spot them real fast.